Today, I'm going to explain one finance word that sounds complicated. But once you understand it, markets start to make a lot of sense. And the word is liquidity. You hear people saying liquidity is rising, liquidity is drying up, market needs liquidity. But what does that actually mean? Why does liquidity affect stocks, crypto, real estate, and even housing? Let me explain this in the simplest way. We are moved into the new house. Everything is going to take time to settle down, but I wanted to make this video to explain this concept of liquidity in a simple way because it's so important to understand this. Especially if you're invested in stocks, crypto, or real estate, it's so important to know why the prices go up and down, and that depends on the liquidity. Liquidity simply means how easily money can move up and down. That's the simplest way to understand it. When there is a lot of liquidity in the system, money is easier to access. People can borrow more easily, businesses can spend more, investors can take more risk, and more money flows into stocks, crypto, businesses. And when liquidity is tighter, money is harder to access. Borrowing becomes expensive. Borrowing becomes harder. Interest rates are higher. Businesses become more careful, and consumers spend less, and investors become more cautious. Think about your own life. If you have extra cash, low debt, and money coming in regularly, it's easier to make decisions. You might invest that cash, you might start a business, you can spend that money, you might take a calculated risk and do whatever you want with that cash. So now if your bills are high, you're low in cash, there is less cash coming in, interest rates are high, so your credit card interests are high, and borrowing is expensive, so you become more careful what to do with that cash. You stop spending, you protect your cash, you become more careful, you start saving money, you stop taking risks. And this is what happens in economy too. Now this is where Fed Reserve comes in. When interest rates are low, money is easier to borrow. And then there is more money, there's more liquidity in the system. Consumers can borrow, businesses can borrow, car loans become easier, investors can borrow. Everybody likes that. When there's more money, there's more liquidity in the system. But when Fed raises interest rates, that's when borrowing becomes expensive. And it's harder for businesses to borrow. It's harder for consumers to borrow. Car loans become expensive, business loans become expensive, and liquidity becomes tighter. And this is why the market watches Fed so closely, because the Fed affects the cost of money. So how does liquidity affect stock market and crypto? So when the liquidity is high, investors, consumers go and buy more stocks. And that's when stocks go up. Stock market goes up when the money is easy. And when the liquidity tightens, everything becomes tough. So there's less money out there. People don't want to buy stocks. People save money. And people might prefer safer investments. They want to sell riskier assets like Bitcoin, Ethereum. They want to invest in something safer. Real estate is also connected to liquidity. When interest rates are low, buyers can afford higher price homes because the monthly payments are lower. So this can push the home prices higher. But when the interest rates are higher, monthly payments become expensive. Buyers become more careful. Investors have to run their numbers more tightly. Deals become harder to cash flow. And this is why I look for interest rates and liquidity when I'm looking for STR or real estate properties. Here is the simple way to explain it. Liquidity is like oxygen to markets. When there is more oxygen, markets can breathe. And when there is less oxygen, markets struggle. That does not mean market goes up when liquidity is high. That is not the only one reason. Liquidity is one of the biggest forces behind the market behavior. So if you are a beginner investor, you don't have to complicate it. You only have to ask, is the money more expensive or easier? Are the interest rates up or down? Are the investors taking more risk or becoming more cautious? So here's my take. What I watch is Fed, inflation, liquidity, interest rates. So next time you see somebody talking about liquidity is rising or drying up, you know exactly what they're talking about. If you want, I can make another video and explain how liquidity affects Bitcoin and stocks differently. Let me know. Comment below for part 2, right? Part 2, and I'll make part 2. Comment below, write part 2, and I will make part 2.